All right, all right. Chris Middleton here. It is Wednesday, October the 9th. We're just getting started. I'm going to give it a minute or two for people to hop in. Stop it starting just before the top of the hour. While we're waiting for folks to filter in, if you're catching the replay on this, just want to, put a shout out there right now. I think Hurricane Milton's happening or, making or about to make landfall in Florida. So we got Hurricane Milton, we've got Hurricane Helene that hit, the devastation going on in the North Carolina, Georgia, Florida. So for all you guys and gals and families and people out there, stay safe and just appreciate what you have. If you feel moved to, make an impact or try to help or do something, please do so. So just wanted to kind of throw that out there. There's a lot of wonkiness happening in the world and want to do our part to try to mitigate some of that. Speaking of wonkiness, so we are here today with the Make Taxes Fair. Welcome, welcome. Let's see some folks filtering in. So we are here today with the Make Taxes Fair monthly tax strategy webinar. We're going to go ahead and get started here. Just before people hopped in, I was kind of making some comments about hurricanes and the wild kind of stuff going on in the world with hurricanes hitting Florida, the flooding in North Carolina, Georgia, all that. So, just be safe wherever you are. Wrap your arms around your loved ones and let them know what they mean to you. So thanks for being here. All right. Well, talking about wonky times, we live in, I say wonky times, and part of that is taxes. Like taxes are Congress and politics and all that stuff, right? So to combat those wonky times, we say we're here to help with the tax side of things at the very least. And that's why we have our monthly tax strategy focus webinar. So a little bit about maketaxesfair.com and who we are. So we operate when we're talking about the monthly tax strategy focus, we're focusing in on one or two of the elements of the Clear Edge framework. And what that is the different tax savings pillars. Last time we talked about credits. Today we're going to be honing in on a little bit of legal structure and deduction optimization. So how you can do so if you have an LLC or a corporation, and that's through the accountable plan and the Augusta Rule. Those are the two strategies we're going to be diving in today. Again, those are legal structure and deduction optimization pillars in that Clear Edge framework. But the reason why we have our monthly tax strategy focused webinar is because we believe that the accounting model is broken. So if you're new to us or just seeing this either on the replay or live, we always like to tell a little bit of our story. So I've been doing taxes for almost 20 years, and I realized several years ago that the accounting model is broken, and here's why. This is a visual representation of the taxpayer roadmap. And I'm like, if that's the roadmap, where the heck's the GPS, right? That looks like a rat's nest, much less a roadmap. So if you say that that's the roadmap, well, where's the GPS? It's a system of confusion. And what I've come to realize as a business owner and as a person living, family life and life in general, systems are vital, especially in business, right? And we see systems in the headlines. We see examples of billionaires and politicians and big corporations paying little to nothing in taxes. Well, those people and businesses are optimizing the tax code to their advantage. And the struggle is that the smaller business owner, I hate the term small business, there's nothing small about being a business, but the smaller business owners are up against the government system, which is under massive expansion. Budget increases, employee count increase, audits are on the rise. And so as a busy business owner, it's like, I lack the time, energy, and desire to tackle this tax problem. In fact, most people put their heads in the sand and they're like, hey, my CPA has been covered, right? Says every busy business owner ever. But the reality is this, most CPAs don't have you covered. And why is that? Most CPAs are what I would call happy historians. Not to knock them, They're doing the hard work. It's not easy work to put the right numbers in the right boxes, but there's not much in the way of proactivity being done. And the result is that you, as a business owner, are trudging up this hill, this mountain of tasks to do every day. And taxes are probably the last thing on your mind. But at the end of the day, that tax bill is draining your profits and weighing you down. So we've developed a system to legitimately fight back and cut your tax bill by 30 to 50% or more, all without the fear of audit or jail time. And why is that? Because we do things the right way through our clear edge framework. So today's presentation is not legal or tax advice. It's general information and broad in scope, right? I say legal and tax advice is when you sit down and we talk about your stuff with you specifically, right? And who am I? My name again is Chris Middleton. I'm an enrolled agent, which is a license administered by the IRS. Been doing taxes for almost 20 years. I'm an entrepreneur and obviously a dad. Love those dad jokes. My business partner, this is maketaxesfair.com. That's my business partner, Tyler, and I. And we are a tax and accounting firm focused on tax strategy first. And that's where we lead the conversation. And how we got here is, again, I've been doing taxes for a long time, and clients would come to me and be like, "Hey, Chris, how can I save money on taxes?" And I'd say, "Oh, do blah, 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 blah." And they'd write a bunch of information down, and then they'd come back the next year and I'd say, "Oh, well, what'd you do with the information I gave you?" Well, nothing. They got busy, family life, busy in their business, or they got started and didn't know what steps to take next. So we went from doing things reactively to morphing and evolving into a proactive state frame of mind. And we do so, again, that's where the clear edge framework came. So it's a system that generates results. So introducing the accountable plan. So what is the accountable plan? How can it be, how can it help you as a tax strategy? Who can leverage this as a strategy? How to optimize and avoiding pitfalls in implementation of the strategy. So an accountable plan is effectively, the technical definition is an arrangement to reimburse employees for work-related costs that meet the IRS requirements to qualify as reimbursed amounts for non-taxable income. In plain English, you get to reimburse either yourself as an employee of the company or your employees for things that are work-related. So this is under that deduction optimization from the clear edge. So let's, rather than talk abstractly, let's give some examples. So you do have to be an LLC or a corporation. If you're a sole proprietor, this cannot apply to you. You do have to have an entity. But let's say you're XYZ company and you implement the accountable plan. Well, you have employees that work from home, including yourself, right? So you can reimburse, if you have a reimbursement, the home internet, for example, $76.29 a month. That's a red flag for audit purposes, folks. If you have an exact, like it's $76 even. Since when was the last time you went to and pay a bill or do something and it was an exact amount, right? It's always a little bit off as far from the exact amount. So that's where the reimbursement, kind of the proof in the pudding comes that, hey, this is an actual reimbursement for the actual dollar amount spent. Depreciation of home office equipment, right? If I buy my own or my employees have their own desk, you can say, hey, well, I'm going to reimburse you what the value of that monthly depreciation would be. And then home office costs, right? A percentage of the utilities, a percentage of the rent or the mortgage. And I put an example here, $216 for January, $327 for February, and $297 for March. Well, if you notice those amounts for the home office reimbursement, right? Your home internet is probably a fixed amount every month. My bill is the same. I pay the T-Mobile hotspot. It's $50 a month plus taxes. So it's always like $52.89 or something like that. But your home office, I put those as different numbers because guess what? Your utilities fluctuate, right? Your electric usage, your gas, heating and air, right? So all of that fluctuates. So if you take those totals and you say, hey, we're going to reimburse the employee, meaning this could be yourself if you're an employee of your own company, you are looking at almost $1,200 in one quarter. So if you extrapolate that out through the year, you're probably looking at, 4,700 bucks for the year, right? If you take all those, the internet, the depreciation of equipment, and then the home office use, right? You can say, oh, hey, that's almost $5,000 tax free that you can pull out of the company, right? So that's the power of tax free if it's a reimbursement. And when I have worked with business owners where there's employees and they're like, hey, I'm looking to increase the uh, payments to my employees, but trying to do so in a tax smart way. How can I do that? They say, hey, rather than give a raise, why not look for ways to give people a reimbursement that's tax free to them, not subject to payroll taxes and not subject to workers' comp insurance, right? So the benefit for the employer is those reimbursements, you don't have to pay those payroll taxes on, and workers' comp potentially that can impact a lot of businesses pretty strongly. For the employee, you're made whole, right? I'm already paying for my monthly internet bill. I'm already paying for my heating and air conditioning bill. So if I can get made whole or reimbursed on a tax-free basis, it's like some of my cost of living has just been covered by my employer. That's pretty fantastic. So I'm like, oh, well, I have to pay that anyway. So it's like I effectively got a raise. Well, the fine print on an accountable plan is you really must have. It's not actually a requirement, but there's a playbook we give people. Um, you really should have a written plan, and we have a sample in a playbook that we can give you, and I'll address that here in a moment. The expenses have to have a clear business connection. So it can't be like, hey, I'm paying for my grocery bill for my family. No, that's not a clear business connection. Or hey, I want to be reimbursed for the bounce house I rented for my kid's birthday party. No, that's not a clear business connection, right? So the reimbursement also has to happen in a reasonable time. So you have to say, look, I'm going to reimburse this employee within typically no greater than a 60-day time frame. We address that in the playbook, but reasonable time, you really should be once at minimum, once every other month. If you reimburse people once a year, that's not considered a reasonable amount of time. And bean counters unite, we do have to do the accounting for the expenses. So you do have to have people fill out an expense report and turn that in. When it comes to a written plan, here's a kind of it's a small on your screen probably, but in the playbook we give a larger kind of sample accountable plan verbiage that you can use or adopt. I would say, take something like this and pump it into ChatGTP and push it out to see, hey, what does that yield for you? Or run it by your attorney and say, hey, I need this adopted for my corporate compliance records, right? So this should be created, drafted, signed off by you as the owner of the business, or you and your partners if there are partners in the business, and it should be an element of your corporate compliance. Why is that important? Well, if you were to be questioned, if you were to be audited, you can pull out and say, look, we're making reimbursements in accordance to our corporate governance documents, right? We have a plan, we have a written plan in place that outlines, what is going to be reimbursed and what the requirements are there. So again, to recap, employers, you must safeguard your plan by reimbursing for only business-related expenses. The business expenses must be reimbursed in a timely manner. And how do you ensure that they're only business-related expenses? Well, you have to do an accounting for that. You have to say, hey, fill out your expense sheet, give me the receipt, make a photocopy, take a picture, submit that receipt. So it is some time, energy, and effort on your end and on your employee's end. But on the other side of that time, energy, and effort is, as we showed you in the example, almost $5,000 in tax-free income. That's worth 20 minutes a month to fill out a timesheet or expense sheet and say, hey, I want to be reimbursed for these things. So it can be very worthwhile. The question is the juice worth the squeeze? And I would argue, you give me almost $5,000, I'll spend 20 minutes a month on that. That would be just fine by me. So what can be reimbursed? Well, Business expenses are what is covered. So home office use, travel, if I'm driving around for my employer's benefit, and my personal vehicle, right? If I'm making running errands or visiting clients, you can reimburse for miles. Um, Phone, if I'm using my personal phone for use of business operations, or if you have equipment that you need to give to an employee, supplies or something, there's um, you could encourage your people to be, reading and say, hey, we're going to read this book this month, so go out and buy it and we'll reimburse you for it. Those types of supplies are things that are needed for their job uh, performance, right? So tools, supplies, training, dues and subscriptions, per diems. There's some per diem information in the playbook. But the bottom line is you've got to have a clear and bona fide, I love that term, bona fide, right? Bona fide business connection with proof of payment of that was an expense. So the pitfalls are the biggest pitfall when it comes to accountable plan and reimbursements is excluded expenses, things being included and reimbursed for that really shouldn't be. Under current rules, under current law with the Tax Cuts and Job Act, entertainment is not deductible. That means if I take a client to a baseball game and we buy a hot dog and a beer and watch a baseball game and we're networking and doing the thing, well, the cost of the game itself, the ticket to the game, is an entertainment expense. That's not deductible. However, the hot dog and beer, the meal, is deductible at the 50% haircut, but it is deductible. So you want to make sure that when you're doing the accounting that you're not reimbursing, or if you are reimbursing, just realize that, hey, we can't, as a business, we can't deduct the entertainment expense. Also, people including personal expense. So the classic example is I go through Costco. And recently, right, we're doing the October 2024, there was that port strike. Everybody is worried about the supply chain, which thankfully they resolved the port strike, but people ran out and bought all the toilet paper. It felt like 2020 again. There's no toilet paper on the shelves. Crappy situation, right? So at the end of the day, if you go to Costco and you buy a bunch of toilet paper and then you also buy printer paper and you buy, toner and ink cartridges for your, thing, you can't lump in those personal expenses into the business. So segregate those out. Be like, hey, your grocery bill for your family, we're not going to reimburse. Your toilet paper or items for your family, we're not going to reimburse. Another thing that people get caught on is gifts in excess of limits. So there are some pretty strict rules around gifting and what's considered a gift. More information is in the playbook, but avoid exceeding those limitations without following the guidelines or the rules. And then reimbursements in excess of the actual amount. So it's like, hey, you spend $92, well, we're going to just give you $100, right? So the excess of the reimbursement should actually be considered taxable income. So a couple of things to kind of hone in on as we round out this strategy itself. Again, reimbursements must be timely. 60 days or less is really optimally you should be reimbursing within 30 days. And the joke is we all know sex sells, right? So accounting is sexy, right? Bean counting, right? I did chat GTP and said, give me a sexy accountant that's G-rated, right? So at the end of the day, let's be real. The accounting and the bean counting and crunching the numbers, that's not sexy. That's not fun, but you got to do it. And the ability to, again, receive these costs that you're incurring as an employee tax free and as a reimbursement to be made whole, it's a way to put money back in your pocket that you're already expending and putting out. Proper accounting plan procedures, again, document. You got to have a written plan, and failing to document can result in the revocation of the deductions. So do it right, tax-free reimbursements to your employees, do the accounting, optimize your deductions. This is a great way to help retain employees and keep morale up, because like, hey, we're reimbursing you for some of the cost of living things. Talking about audits. So people ask, well, hey, if I'm reimbursing, like, where do I put some of these things, right? Well, when you do a reimbursement and an expense report, you can structure that expense report to where people put like here, give them a here's the column that goes in. So give me a subtotal of the mileage expenses. So that would go into your automobile expenses on your tax return, or office expenses, right? You could say, hey, I'm reimbursing you for utilities, so give a subtitle for or a sub you know what I'm saying, subtotal for utilities. So you could quickly, take, if you reimburse somebody, let's say $1,000 for that month, you would want to take that $1,000 and split up like $193.28 goes to utilities, 500 and something dollars goes to mileage, X dollars goes to supplies. So you kind of break that $1,000 reimbursement out into the various categories that you're reimbursing for, right? If you just shove it all to one like reimbursements category, I've seen that done on tax returns. That's a terrible way, because then that opens the door wide open for the IRS to say, hey, I see you have like $70,000 in reimbursements. What's that for? Versus if you split that out, that $70,000 split out over several categories, that actually reduces the risk of audit. So I hope that helps, but you want to make sure that the bean counting part of it is done. So I would say, welcome to fabulous vagueness, right? What starts in ambiguity stays in ambiguity. Well, I've actually already posted the resources for this. So we have launched a tax strategy community. This focus webinar is part of that tax strategy community. Take a screenshot of this or pause and go to school.com. That's SKOOL.com. And then /tax strategy focus system. Terrible, I know. We're working on that. It likely will be maketaxesfair.com /community. That will be a much easier site to go to. But for the moment, it's this school.com /tax strategy focus system. So include those hyphens. But that's a free community where I've already dropped the resources for this webinar. There are 2 playbooks there. One is for the accountable plan that goes into a lot more detail. The other one is the Augusta Rule, which we'll hit in just a moment. But if you found this valuable, and we're going over this fairly quickly, but if you found this valuable, hopefully this information is useful to you. And the goal is that you are able to start thinking about, hey, what are some of the things that we can be doing in our business to reimburse and optimize? So I'm going to pause for a moment, see if there's any questions. Just in the chat, if you don't mind, does anybody already have an accountable plan implemented in their business? Yes or no? Put a 1 for yes, or 2 for no, or yes or for yes and no for no. I know I got a private, somebody messaged me directly. They've got, they know about it, but they haven't implemented it. Okay. So most business owners, I rarely see people come to the table where they already have a accountable plan in place. This is a low-hanging fruit area: business use of home, mileage reimbursement, cell phone reimbursement, as well as some other things that you can put in there with the accountable plan. There's more details in that playbook, but this is a really low-hanging fruit, missed opportunity for the vast majority of business owners. Right, let's move on to the Augusta Rule. So what's on the docket for the Augusta Rule? What is the Augusta Rule? Who can leverage this? How do you optimize this in your strategy and avoiding pitfalls in implementation? Again, this kind of ties into that legal structure and deduction optimization. To leverage this, you cannot be a sole proprietor or technically a single member LLC. You really should be a LLC that's made the S Corp election, or an LLC that's a multi-member LLC. Single member LLCs are considered to be disregarded entities and effectively the same as a sole proprietor in most views when it comes to the IRS. But the Augusta Rule, so what that is you can rent your home to your business for tax-free income as long as you meet certain criteria. So most business owners that we work with see a $24,000 deduction in tax-free rents that they collect. So how do we do this? Well, you can rent your home to your business. Again, one of the criteria is it must be for 14 days or less. It must be your home, your domicile, and it can be whether you own or rent. But the rents also must be reasonable and comparable. So you have to be able to say, hey, I came up with this. It's not just $1,000 a month. This is one of the biggest things that I see with people. If I present in a room full of people, I say, raise your hand who uses the Augusta Rule. In fact, in the chat, if you don't mind, do you utilize the Augusta Rule? Yes or no? Just toss that out there. Most people raise their hand that do, and they're like, I say, hey, how much are you charging per month? Or how much are you charging not per month for your events? And they're like, oh, $1,000 a month. And I'm like, cool. Where'd you get that number? They're like, I don't know. Seemed reasonable. Okay, it seemed reasonable, but what proof do you have of that? So you really got to do some work to make sure that it's reasonable and comparable. You also cannot be a sole proprietor for this. So again, most business owners are seeing $24,000, $25,000 as a write-off. The question is, what could you do with an extra $20,000, $24,000, $25,000 out of your business tax-free? So the fine print on this is the events must be business related. It cannot be entertainment, and you have to charge that reasonable and fair market rent. So you can't inflate. You can't be like, oh, $5,000 for my house for a day's event. No. How did you get to that number? What proof do you have that that's a reasonable and comparable fair market value for rent? So an example for meetings, I always like to throw this one out there. If anybody in the chat, if you can call out, what does this look like to you? Give you a moment to absorb that. Somebody said a vision board. Love it. Yep. So this is a vision board, or supposed to be an example of a vision board. So if you take a vision board, if you have a vision board event, how long does it take to create a vision board? Some people say, well, a couple hours. Some people say, hey, that could be a full day. Sometimes people are like, 14 days. It takes 14 days to create a vision board. Nice try, but no. Realistically, to create a vision board, to gather all the information and the visual aid stuff, probably takes a couple hours, right? Because you have to think about, hey, what do I want? What's my vision? What are my goals? And then look for our work to visually put together that vision board, right? It's meant to inspire you. So examples of events that you can hold in your home are networking style events. So workshop style events and strategic planning events. So under the network style events, I can say, client appreciation, like a barbecue, or, hey, thank you for doing business with us. Power partner networking, where you can pull referral partners together. I have a guy who once a quarter, he gets, I think, about 10 other business owners together, and they have a full day where they just power partner and mastermind on their business. They're like, hey, we're implementing systems, and they give each other feedback, and they're kind of beating each other up on what can they improve in their businesses to be more efficient, more effective, and drive business forward. He told me, he said, Chris, I probably have done $25 to $30 million in revenue out of that group over the years that I've been in that group. Like it just generates a lot of business because we know that we're aligned and we're power partners, and it's good to catch up. We're busy running our own businesses with our lives and families. So we take time out once a quarter to kind of say, hey, here's my goals. Here's where I'm at. This is what I'm trying to do for my business. These are some challenges that I've had. Does it take time, energy, and effort to organize that? Absolutely. Is it valuable to him? Absolutely. So hosting events, again, networking style type events. You can have subcontractors or employees to your home doing workshops. A vision board event is a great example. I say you can take a vision board event, put together an event in your home where it's 4 to 5 hours to create the vision board, and then say, hey, everybody here, you're here for this vision board event, but let's not just take our vision boards and put them in that dusty corner. Let's revisit this. So let's map out for the rest of the year another 4 meetings. So that one vision board event can turn into 5 meetings. Say, hey, we're going to circle back once a quarter and see how we're doing on this and have some accountability with the vision board, right? So business planning, all those things, I like to say these are kind of some ideas in the playbook that we give that's in that free school community, the tax strategy community. The playbooks are already there, so you can go there and get those. But I like to say, the value of the venue is what most people miss. So the reasonable compensation for these, or the reasonable rent for these events. And here's some real life examples. So I had a client, they decided that they're going to do 4 large events where it's going to be 20, 30, 40 people, barbecue, a client appreciation, employee appreciation type events with families and, that type of thing. So they got an average quote of about $3,500 per event. So 4 events at $3,500 a pop for the venue for the event was 14,000 total for those 4 events. Then they said, okay, we're going to do some workshops. They're going to be medium size. We're not going to invite families, not going to be food, barbecue, or anything like that. It's just going to be kind of rolling up our sleeves and getting to work on our business. So they decided to have 4 of those events. And they got quotes for those types of venues or events. And they said the quotes, the average quotes they got back were 2,200 per event. So 4 of those at 2,200 is 8,800. And then they said, okay, to fill in the gap, because we got 8 days there, 4 and 4, 8 events. They said, well, we're going to have some smaller planning sessions where it's just going to be me and my spouse and maybe our one of our administrative assistants to kind of help take notes. So they got some quotes there, and they found out that it was going to be $950 to rent like a boardroom or a meeting space to host a meeting in. And so that was 6 events at 950 is 5,700. You can see there the total 14 events kind of spread between large, medium, and small events. This person got a tax write-off of $28,500. $28,500. I always say you want to get a minimum of at least 3 quotes per event, and there's some guidance in the playbook on how you can get the quotes efficiently. But I'd love to know who said this quote. I have not yet found who said this. It's unknown. But the magic you're seeking is found in the work you are avoiding. So your tax bill can be legitimately less, right? Your tax bill doesn't appear by magic, right? It's the result of hard work to generate profits in your business. And so with a little bit of work on your end to do some planning around what type of events are you going to have and getting the quotes, you can generate significant tax write-offs. In this case, 28,500. The highest I've ever seen was like 144,000. The lowest I've ever seen was like 13,000. But on average, most people pick up between 22, 23, 24,000, kind of in that range or just above. So what could you do with about $25,000 out of your business tax-free? That's the power of doing the work. So the 3 phases, or the 3 things that you need to consider when going through the Augusta Rule, is the before, during, and after the event activities, right? So before the event, you really need to define the event. And then after that, you need to plan the event, and then you need to get the quotes. So when we say define the event, you need to say, okay, what is this event going to be? Who's going to be there? What's the purpose? Who's going to be invited? What are we going to accomplish by having this event? What is the bona fide, legitimate business purpose, right? The devil's in the details. So riddle me this, Batman. If you spend the time detailing that out, okay, I'm going to have 50 people. That's including families. I'm going to need a space for a bounce house for the kids if we're doing a barbecue, because we want to talk like adults, and I've got 2 kids and they drive me nuts sometimes. I love them, but give them something to do. So have an activity, pin the tail on the donkey, have some games, that type of thing. So you want to have space to be able to do all that stuff. Have some cornhole for the adults, like, hey, let's have a cornhole tournament. That's what you do. You interact and as you're visiting and networking and doing that thing. So if you get specific on the details of the event are, meaning defining the event, defining what's going to be there, I need audio visual equipment. Now, when you reach out to a venue to get a quote, you've got a really detailed quote. So if you say, hey, I need event space for 50 people for kind of barbecue. So I need a little cooking area and you don't really give them any more details. What type of quotes are you going to get back? Probably fairly generic or, not very detailed. But if you can give a really detailed, hey, I need this, I need this, I need audio visual equipment, I need to be able to put stuff up on a screen, I need PA systems, so we can have an announcement. We're going to do some employee recognition or give out some awards for our best subcontractors, right? All those things, that's going to give you a more robust, detailed quote. And the more detail you get, the better that dollar value is going to be. So again, the magic you are seeking is found in the work you're avoiding. So Adam Sand, one of my favorite human beings on the planet, with a roofing business partner, he says there's no substitute for the hard, boring work. And if you're in an IRS audit and you didn't get quotes, you're like, hey, I just pulled the numbers out of the sky, versus you did the work to get audit, to get the details and the quotes for what you're going to spend on the rent for the event, you're going to be feeling much more comfortable when it comes to if you have a question on that. And this is an area where the IRS can and sometimes does say, hey, where'd you come up with that number for what you're charging for rent? So getting the comparable quotes, there's some more information in the playbook, but what if you're reaching out to a venue and they're like, yeah, their time, energy, and effort's valuable as well. And they're like, they won't send me a quote. Well, how you can get around that is you can say, hey, Jim, talking to Jim at eventcenter.com. Hey, what's your email? Do you mind? We talked about today. I told you, here's the type of event we're going to have. We're going to have all these things. And you told me it was going to be XYZ dollar costs, right? Can I pop you an email just to confirm that? I'm just trying to get some budget together and make sure that I'm understanding right. So pop them an email. If Jim replies and says, yeah, that's accurate, let me know when you want to book, that's bulletproof. You've got, hey, a documentation of the call that you had. But even if they never respond, I now have something that I can print out saying, IRS agent, here, look, I talked to Jim on this date and he told me over the phone that it was going to be this. So that's what I use to base my quote for my venue for, right? So that gives you a paper trail and really kind of helps provide that documentation. During the event, you want to document the event. You want to take photos. You want to take notes of the event. You want to execute and have the event. So don't just say you're going to have it, but actually follow through. So, pictures of invitations or emails that you sent out saying, hey, thanks for coming. Appreciate you being here. And then you got to actually have the event, right? Thank you, Captain Obvious. You actually got to do the work and have the event. After the event, you want to gather your documents, all the proof that you had, the quotes that you obtained, etc., and then create the write-off. You write yourself a check. You create an invoice and say, hey, I got the quotes for this type of event or venue, and I need to write a check for $2,800, $50 for the event, plus reimburse yourself for the food or a portion of the utilities included in those quotes, maybe not. If you had to buy any equipment for the event, reimburse for that type of thing, making sure that you capture all those write-offs. So tying it all together, there's the before, during, and after the event, and really it's like a puzzle. You got to do all the pieces to be able to present an accurate picture to the IRS if you are ever to be audited. Talking about audits with this one, there's a story. There's three brothers, and they were doing a really good clip of business. I think they were netting around $1 million plus each per brother. So about 3-4 million net profit for the business. Well, they had written themselves checks of almost $136,000 per brother, per partner in the business for Augusta Rule events. And they got audited. They had almost $300,000 or a little over $300,000 in rents paid by the company. And they're like, hey, that's a lot in rent. What's going on? So the brothers came out and they said, hey, we had Augusta Rule and we had events that we did X, Y, and Z. And so the court case, because this actually went all the way up to court, my understanding is they were like, oh, okay, we accept that you did events. We accept that you had legitimate things that you were doing for the business. Where they ran afoul of the rules was the IRS said, well, how did you come up with those rental agreement numbers? And the brothers were like, they didn't have any proof, right? They didn't do the work. They didn't get the quotes. They didn't have any proof that that was the amount that they could charge for reasonable rent. So what happened was the IRS, the court, the tax court said, well, we'll allow a deduction, but we're going to allow, and this is what blew my mind, we're going to allow $500 per night. Per night. And I was like, okay, but I'm not, these guys weren't running an event where they were providing overnight accommodations. It wasn't like a hotel room, right? Where you Airbnb rent a room out for $500 a night. They were hosting the event that was like business networking, meetings, that type of thing. So I think that's where there was a miss by the defendants of the three brothers. The attorneys should have said, well, that's great, but we actually need to get what would comparable quotes for event space be. So protect yourself. Don't be stuck with the IRS saying, hey, you're renting out, rooms in your home for accommodations. It's like, no, I had a client appreciation, customer appreciation barbecue where we gave out awards and we recognized our top referrer, the person that refers the most business to us. We recognize our best, most efficient subcontractors who gets the best reviews, right? These are where we give awards and recognize and give praise to our amazing customers and employees. This was not a overnight accommodation, right? So if you get quotes for what would the venue cost for an event that's like what you're hosting and have a written document of that or a written quote, that's going to be your most bulletproof justification. So again, what happens in vagueness starts in ambiguity stays in ambiguity. So this is all great. If you found some value in this, I encourage you to check out the implementation resources in school.com, the /tax strategy focus system. The playbooks for these resources, the Augusta Rule and the accountable plan, are already in the group. I already put them in there. So jump in there, grab those playbooks, and join our community, because in our community, we're posting stuff, not quite daily, but we're posting content, and it's a place where you can ask questions for free. It's free to the planet if you're self-employed. So recall with me the clear edge framework. And, these are, today we hit on the legal structure a little bit, deduction optimization. We've got some things that we're going to be honing in on, kind of deduction optimization as we approach year end, and what are the things you could be doing. It's not too late to implement an accountable plan. It's not too late to implement Augusta Rule, to look back and say, let's get some quotes now for things that we've done in the last few months. Define and plan those out and make sure that you've done them, and plan for the balance of the year. So hopefully, I'm going to leave you with one more thing. So hopefully this provided some value to you, and maybe it left you wondering, is there something that you're missing in your specific tax strategy? And our goal is, when we give educational workshops like this, is to help people reframe the lens by which they view their taxes, right? And we know that systems are vital. In fact, it's almost 20 years as a tax preparer. I know systems are vital for business, for revenue, hiring, marketing, operations, all these things. And business owners love to plan business plans. I was just talking to somebody about a business plan yesterday, right? We want to put together our operation plans or strategic plans, but it's very rare that I encounter a business owner that has a tax plan, or better yet, a custom tax strategy roadmap. In fact, most people, I would guess you maybe don't have that. And so how we do that for people is we take your information. If you choose to do a custom tax strategy roadmap, we assess your information, say, okay, what are you doing in your world right now? And what are you not doing? Then we build you a custom tax strategy roadmap and then deliver that to you. George, when we delivered his, George is one of my favorite people on the planet. He said, this is exactly what I was asking my prior accountant for and was not getting from them. George's savings, we found him over $35,000 in tax savings for a 54% reduction in his tax bill. Nathan said it's a game changer having a tax strategy system in place. I feel more control now, and I've gone from 0 to 100 as far as confidence in being on track when it comes to my taxes. For Nathan, we found him almost $20,000 in taxes saving, or almost 77% reduction in his tax bill. Powerful. So if any of this resonates with you, we'd invite you to check out how a custom tax strategy roadmap could be yours. MakeTaxesFair.com/get-my-roadmap. So get my roadmap is where you can go for there. And if you found this valuable today, please share. Friends don't let friends overpay the government. We are here to assist and help. And that is all I have for content today. Are there any questions? Anybody have any questions out there? Anything that was unclear? I'm going to go ahead and stop recording then and stick around for a minute. Hey, appreciate everybody here being here live and with us. And as we approach year end, keep in mind there are things you can do between now and year end to reduce your tax bill, and check out that custom tax strategy roadmap offer, as well as it is free to the planet if you're self-employed, our tax strategy community. So I invite you to check that out. There'll be a link on the replay below where you can click to join and check that community out. And again, the playbooks for both of these strategies have already been posted in the free group. So if you're looking for the playbooks, additional information, checklists, and examples of the accountable plan, sample language, etc., all that is in those playbooks as well. Thank you for your time, for investing a little bit of time to be here with us. And if you can't be good, be careful, and we'll catch you next time. Bye for now.